Away and good to be back in the hot seat again. Had a couple of days off, so just catching up on things this morning and looking at these charts afresh almost to see how the land lies. And equities on the front foot this morning, as you can see in both charts in the centre. The DAX has had just a bit of a push here on the upside, breaking the earlier futures print high that we had at the Eurex Open at 7. An immediate test up at R2 today. I was just looking a little bit longer dated. Interesting to see then that after we had that initial first round election result, where Macron obviously went into the runoff with Le Pen, we had that big gap up higher. We've kind of consolidated through much of last week, and now we're having another secondary push on the upside. We'll talk about the final, or third and final televised debate we had between Macron and Le Pen last night, but overall in summary, nothing's really changed. If anything, it's just cemented the 20 or so percentage point lead that Macron has over Le Pen. And so maybe that's just assisting some of the risk on kind of mode this morning. Likewise, S&P then following suit. We've been confined really by R1 thus far this morning during Asia Pac. We had a brief look above it before just pulling back down, but looking slightly longer term in the S&P. I guess we're still kind of defined for the moment at least by this fairly tight range that we've had forming really since the French election result, again mimicking the not quite as severe as the movement in European indices, as this is just moving as an indirect fashion of that, but really we've been locked in a fairly tight range. If we're looking more near term than 23.90 and 3/4 on the upside, 23.75.5 downside, we're pretty much mid price action of that. Obviously we start getting up towards the 2400 mark. This is record territory then, the S&P, but not really likely to see too much movement from this point. Obviously from the Fed last night, very little lasting impact from the Fed announcement, and we'll have a look at that shortly as well and what it means going forward. The other thing we've had last night is out of the US, the House have finally approved a $1.17 trillion spending bill by a majority of 309 to 118 votes, moving a step closer to avoiding a government shutdown. So that seems to just be moving away in that respect in terms of any concerns as well on that front. Sticking with the equity markets, FTSE also positive this morning, as well as the other European indices. There have been a couple of earnings reports that have come out. Firstly, let me just show you this one. HSBC posts a surprise profit gain as bank stems revenue drop. So their adjusted pre-tax profits were up 12%, revenue gains up 2%. The bank on track to hit cost savings target according to their CEO. They rose overnight in Asia Pac on the back of these, which came out earlier this morning. Initial trade, they're up around close to 4%. Other solid European earnings this morning. ABN Bev, they're up over 3%. Other notable movers, Shell are up 2.8%. Morrison's up 1.9%. On the flip side though, Next had very disappointing results. I think they did trim the top end of their profit forecast. They're down, the UK retailer, about 4%. Some of the French banks also a little lower as well. But overall, I'd say more tilted to upside surprises than negatives. That in the context with no great shakes out of the Fed, who remain on course. And then Macron not faltering at the last kind of hurdle, keeping things fairly assured into this weekend's final French runoff, means that there's moderate risk on sentiment this morning. As a consequence, gold has been trending lower really since the yesterday's session. Just obviously I wasn't here, but catching up on things, we had ADP, which by the sounds of it was roughly in line with expectations. You then had the Fed, and gold actually had a bit of a move on the Fed, and we have seen a bit of a dollar reaction. As you can see, a bit of volatility on initial release, but overall, the latter part of the US session, gold came under pressure, and we've sold off again as Europe has come into the market this morning. So the initial dip that you've had here, top left in euro, dollar and cable, has It's probably a byproduct of really two things. One, bit of slight dollar strength adding to what was late last night as European UK traders react to the Fed announcement, and then also a bit of a breach of those initial lows seen in both respective pairs from last night, before then staging a bit of a recovery here more recently. So what did the Fed say? Let's have a look at some of the headline news. The Fed kept rates on hold, so as completely as expected, as the slowdown in growth seen as temporary. So fundamentals underpinning consumption growth stayed solid, and there was a unanimous vote in decision that keeps June hike option on the table. One of the key comments that came out of the Fed statement last night was the FMC acknowledged the soft quarter for growth in Q1 and also softness in consumer spending, but also emphasized the need to look through it and that the slowdown is likely transitory. That's a really key word, that transitory word. That's a word that the Fed like to roll out, which is saying that although this is telling you one thing at this present point in time, that it's not going to last, that it's just basically almost like a seasonality to it. It's a blip that's happening, we're aware of it, but we're comfortable with the fact that it's not going to last. So what has this meant is that this first quarter growth figure that we had last week, which came out reflecting a very sharp slowdown in the US economy to get the first 3 months of 2017 underway, the Fed are willing to look beyond that and look at other measurements. So, for instance, the labour market, the Fed said that job gains were solid in recent months, despite some of the slight moving off the more elevated levels in that payrolls has been at. They also acknowledged that the drop in core inflation in March, and that while market-based measures of inflation compensation remain lower, survey-based measures of long-term inflation expectations are little changed on the balance. What all of this has meant then is that as far as the market is concerned, this is the federal funds rate futures as measured by the CME. So this is shorter end interest rate futures, which are highly sensitive to fluctuations in views for when the Fed will move rates. And this has actually increased. We're now looking up at around a 74% probability that the Fed will hike again 25 basis points in the June meeting. So if anything, the Fed have done actually a pretty good job of just sticking to their dot plot projections. If you remember what they look like, this is the curve, if you like, of rate increases coming out not just this year, but the subsequent years thereafter. And for 2017, we're expecting 3. They obviously delivered 1 in March. We're looking at June and then possibly September. And then they would have fulfilled their mandate and communicating effectively, very unlike what they did in 2016. So far so good as far as the Fed. With June becoming more priced in, it's meant that the dollar saw some strength last night. Gold came under some pressure. And then if you start looking at the way that T-notes reacted, yields also rose in the US, which you can see from the fact that treasuries came under some pressure. That was the candlestick there when the release actually came out. And we're back down to the lower bound of recent price activity that we've had over the recent few days now in the US 10-year. So not much reaction in equity markets. I wouldn't say that's really the asset to trade over data or these kind of speeches from the Fed. It tends to be fairly unreactive, especially once we're in the midst of earnings season as well. But any of the dollar strength that was seen last night, keep in mind though that the dollar is still elevated from where it was. We've had a little squeeze this morning which saw both pairs run lower before recovering. If you actually look at the dollar index, I would say that this about turn that we've had in both pairs, if anything, is more to do with a little bit of profit taking on those dollar longs that were seen short term yesterday on the back of the Fed release. Because ultimately they're just doing what their intentions have always been and forecasted. It's nothing particularly new. The other thing, of course, which might be helping negate some of the negativity in the euro this morning, is the fact that you had the final televised debate. So Le Pen and Macron had their final kind of showdown last night. Really, this is the gist of it, is
There was a Snap Elab poll that came out just after the 2-hour debate had finished, and it showed that Macron won by a score of 63% to 34% over Le Pen. The whole debate was kind of centered around Le Pen, questioned intensely about her plans for a dual currency regime, her plans regarding exiting of the euro, what she intends to do, and her coming back and just saying that Macron is an elitist and so on and so forth. And so nothing particularly new was exposed. If anything, as per this chart, it just ratified the fact that really Macron's got a pretty decent hold on this 20 percentage point or so lead that he holds over Le Pen. I see that as really unlikely for that to really change going into the final Sunday vote. And it's looking like he will become president, barring any shocks. What could move this percentage point number between then and now? Well, if there was some kind of scandal that came out for Macron, maybe something akin to Francois Fillon, where he had been, I don't know, as his role as economics minister, maybe he had some illegitimate government funds that he was placing somewhere. Maybe something in his previous life, in his past, comes up that's negative. Maybe there's another terror attack in France. Even under those scenarios, 20 percentage point swing is a huge amount, and even though it might decrease, I very much doubt that Le Pen would ever get to the lead going into the actual vote. So not to discount this as a tail risk for the weekend, but it looks as though the French situation looks fairly assured for the time being. And if we're looking at euro this morning, despite the run lower that we had, this was when the FOMC came out and the pending dollar strength. That was the FOMC trade there. The initial candlestick, the most violent in terms of volatility and forceful to the downside, and then that trend of dollar strength continued all the way into the US close. So net where the euro is coming up to here, just above pivot, puts us back square to where we were at the announcement of the FOMC broadly. And so, you know, nothing in terms of a grander scheme of things really shaking it up too much. One of the other things that I was away and I missed was some of the initial opening statements in regards to EU talks with Theresa May and the UK government over Brexit. I did see, though, a couple of tweets flash while I was in the midst of retiling my kitchen, was that we had the €100 billion number flying around about the talks between Theresa May and EU's Barnier were very negative, i.e. She was said to be not budging on a number of points. I saw comments out of various European officials saying it's 10 times harder now due to the UK stance than they ever thought it would be. Piers showed me this morning when the initial stories came out about this Brexit bill, everyone was talking about 60 billion. That now seems to have increased to 100 billion. So almost doubled. That saw some sterling weakness yesterday, very early morning. However, we recovered that. And really this is more dollar than it is really sterling, I'd say. But certainly these talks around Brexit are going to start to intensify probably in the weeks ahead, especially when the French situation, if Macron wins, that kind of moves away from market attention from a macro point of view. One interesting graphic that I saw was where have they got this 100 billion basically from. This is quite a good infographic looking at the various different kind of portions that make up that big figure. And so, you know, scrolling down, contingent liabilities, the EU now wants the UK to make an upfront lump sum payment to cover future liabilities. So if you talk about the fact that the UK must have this transitional period secured, given the very limited time frame to negotiate under Article 50 of the Lisbon Treaty, to then get on to trade talks, the EU have started talking about this 11.9 billion figure that they've got to pay up front.
that will get the ball rolling and get EU officials a bit more on side to then start talking about other matters, i.e. transitional agreements and so forth. Some of the biggest portions here, down at the bottom, 36.2 billion. Over the past decade, the EU is committed to projects such as road, rail construction the UK has yet to pay for. So don't forget, whenever you have these big infrastructure projects across Europe, they get planned years and years in advance, the money allocated already very far in the future. And so therefore the UK would have been already involved in that, and as a net product of being in Europe, also a contributor to the cost in which they would have already been accounted for, that making up a large portion. Obviously the scale here that you're looking at to make this total figure though, the more contentious is on the upside, the less contentious on the downside. Legally very difficult for the UK to argue any different than that was the framework in which they'd signed to as being part of the European area, and so actually they're going to have to pay for that number. The more contentious ones are the upfront contingent liability payment. Also as well, the EU wants the UK to pay for 2019-2020 commitments, most of which are for payments to EU farmers. That's also a fairly large amount, but obviously the UK want to be limiting the types of payments going forward when they're not actually even part of Europe at that point, because it would be beyond then March of 2019 when this 2-year clause expires. So quite a few things to have a look at there. I did tweet this out earlier if you want to have a closer look at it. Let's have a quick look at the day ahead then. A couple of data points coming out, and we've already had a few this morning. So aside from the earnings, which as ever from UK and Europe come predominantly pre-market, likes of HSBC in particular very strong on the banking sector, ABN Bev also a big stock in Europe, they're up around 3%, so the DAX on the front foot. The actual PMI numbers from this morning are final April figures, so the market's going to be not too interested in that, to be honest with you. But from the UK you do get the service PMI, and given that's the predominant driver of economic growth in the UK, we'll be keeping a close eye on that. That'll be out at 9:30, so about 40 minutes time. That'll be alongside the latest lending and mortgage approval numbers. Then going through the morning, pretty quiet overall until the US come in. Then you've got trade balance as the headline figure, weekly jobless data as per usual. You've then got 3 o'clock factory orders and durable good revisions. So a couple of things coming out from the US, none of which I would say is particularly groundbreaking, I would say, not given now the latest communication from the Fed, where they've said that things like softness in Q1 is transitory. Any weakness in these numbers I think will have a fairly benign effect on market expectations about the June hike, at least for the time being. Obviously keeping an eye out for Trump, any updates on Capitol Hill, still monitoring the situation about healthcare reforms and also the spending bill to avert a government shutdown. I'm sure Trump will be as active as ever on Twitter today. A couple of ECB speakers though to be aware of. Was drawn to my attention. There's quite a few, so you got Sabine Lautenschlager, Peter Praet, Yves Mersch, and then the man himself, Mario Draghi. They're all speaking today. Draghi not speaking until 4:30 London time. It looks like this is more of a presentation at a ceremony rather than anything on the economy or monetary policy, but text will be made available on the ECB's website, and that'll be at 4:30, so maybe worth just keeping a half an eye on at the time. Just in closing then, just seeing the euro. So the euro back exactly to where we were at the release of the FOMC meeting. That was that line we just put on the chart. Above here obviously you got R1 and then the top end of that range that was forming through most of yesterday's session. But you can see here how the market's kind of traded this short-term fundamentals. The dollar strength, Europe squeezes a little more, fails to maintain and break that move from yesterday's low print in the pair. We've then come back up through pivot, back exactly to net neutral, where the Fed really hasn't really changed the game. It's just reiteration of their stance. So to me, this is where we are at the moment at 109.40. It's fairly unsurprising. One final thing, I did get asked a question today on whether it would have any impact, and that was about today marks polling stations. They have opened in England for local council and mayoral elections. So this isn't a general election, of course that's not until the 8th of June, but what this is a local level elections. So nearly 2,400 positions are being elected, including the first votes for 6 combined authority mayors created under devolution deals. The ballots boxes don't finish or close until 10 p.m. this evening. Now, I don't think you're going to see any movement in sterling through today. I don't think it kind of works in the way that you get these kind of feelings about certain sentiment of turnout ratios and how the weather's affecting turnout, all these types of things that you would get when it's very much in focus, like the night of the EU referendum, for instance, or the general election upcoming. But what I would imagine is that by tomorrow morning, given these polling booths close at 10 p.m, you'll have a general vibe for what the local level feeling is for how the voting would have gone, and that'll dominate some of the press activity Friday morning, and it might act as a bit of a sentiment gauge as to how the nation is feeling heading into June 8th. But in all respect, even though you've had some now movement on the Brexit talks, the Conservatives look to still have a fairly significant majority, and that might well what would be reflective in these local level elections. So I wouldn't be looking to trade sterling off of it today, but tomorrow morning it would be something I would be interested to monitor to see what the overall tone was in local councils and mayoral elections. And that might have some influence at the open at kind of 6-7 a.m. tomorrow morning. Okay guys, going to leave it at that. So that's your morning update. I will see you in the chat room. Any questions, just pop them in there and I'll be happy to address. Okay, have a good day.